wanted to know how you could deduct all of your rental losses against your W-2 income? Well, now you can if you become a real estate professional. The reps. No, I'm not talking about those kind of reps. I'm talking about the real estate professional status reps. How do you get this? Well, let's start from a basic example to why you want to be able to become a real estate professional. Number one, you will get to deduct all of your rental losses against your income. So let's say that you had about $250,000 or $300,000 in real estate losses. That was created through cost segregation studies done by yours truly. And then when you go and let's say your wife has $300,000 in W-2 income and she's got about a 25% tax bracket, which puts her in about $90,000 of tax liability, you take that $300,000 in cost segregation losses that you just created and write those off against your $300,000 married filing jointly income. Hey, what's better than that, right? But you can only do this if you are a real estate professional. How do you become a real estate professional? Well, the IRS has some extremely strict rules around becoming a real estate professional. This is a very highly litigated area of the IRS Internal Revenue Code. But here are the two main things you need to know. Number one, you need 750 hours in real estate, and you need to be materially participating. Now, let's step back a little bit and talk about those 750 hours. Now, that may not seem a lot to you in the first year, but here's the thing. If you try to go to the tax courts and tell them that, hey, I had a W-2 full-time job, but I also put in 750 hours in materially participating in a rental business, the IRS is going to throw out your case, they're going to laugh at you, and they're going to disallow any losses that you may have taken. It's simple. What does 750 hours constitute? Well, it could be, according to the IRS, this is their words, property management, brokerage work, looking at repairs, maintenance, reaching out to third parties to work on the home. These are all things that qualify under the 750-hour requirement. Once you get that requirement in, voila, you are a real estate professional. But there are certain things that don't qualify as real estate professional or material participation hours. Let's say you do a lot of education. You watch tons of podcasts. You watch videos of yours truly on how to become a real estate investor, the tax strategies on real estate investing. That does not qualify for real estate professional status. Neither does looking up properties on the MLS. Neither does searching for properties on the MLS. What does count as real estate professional status hours are, again, property management, looking at costs related to the home, fixing the home, doing a lot of cleaning, doing repairs, doing maintenance, hiring contractors, hiring a cleaning service. Doing all these things count towards your 750 hours. Now, I'll give you a quick example. Let's say you are a retired individual. You're 65, you've got a rental property in Tampa, in Florida, and it's got 5 bedrooms. You live in a different property, but you go to this rental business to clean the home, to make sure the trash is out the way, to make sure the footpaths, the landscaping, everything is looking fresh, pristine for potential tenants to come and live in that home. If you do that, that counts towards your real estate professional status. Now, I tell you what, a lot of people, they email me, they go like, hey man, look, I've put in a lot of hours in real estate. I've got a brokerage, I'm a multifamily investor. I've got all these different things. I mean, I'm full-time in real estate. Why doesn't my CPA classify me as a real estate professional? Well, it's easy. If you are a multifamily investment advisor, if you own a big real estate firm brokerage, you probably have managers, you probably have assistants, you probably have agents that are doing most of the work. They are the ones who are managing the property. Guess what? The IRS will disallow your real estate professional status because they cannot be the ones who are doing the upkeep of the property. It's gotta be you. It's gotta be you, the individual, who's out there, who's putting in the work, who's going out there every single weekend on a Saturday, on a Sunday, and accumulating those 750 hours. Now, You may come back and tell me, hey man, listen, I've got 5 properties, I've got 10 properties. Well, don't worry, that doesn't matter. When you come work with us, we're gonna make sure we can put you in a collective. Now, what does that mean? So instead of putting in 750 hours for each property, you could put in 750 for an entire collective, a group of properties which will qualify under the IRS. The reps is extremely litigated, it's extremely hard to obtain, but working with qualified freaking CPAs, we can help you plan for the QBI deduction, for the cost segregation studies, for the passive loss deductions, the 100% bonus depreciation. This is all about deductions and more deductions and more deductions and more cash flow to acquire more properties.